Hi guys, welcome to my channel. Today we'll be talking about advanced breaker block, and I know most of you already know what a breaker block is, and most of you don't know what a breaker block is. But there's a difference simple simply identifying one and understanding why it forms and when it actually matters, right? A breaker block is just essentially a price area whose original rule has failed, right? And can potentially become relevant in the opposite direction. And I'm going to show you how that happens. Now, a breaker block develops when a previously respected area fails. So if we have another block, and then let's say at this point, right? Let's zoom in. You have another block at this point. So we mark out the last candle. There's another block in this area, and then let's mark it out. So you can see all these points. There was another block here, it got mitigated, got retested again. But if we cancel this part out of it, you can see this is a new other block, right? And you can see this already happened. Everybody's expecting that price taps into it, and when price taps into it, we sell. That's what everybody has been waiting for. We've all been waiting. Not we, you all have been waiting at that point that price gets tapped in at that point, and that originally is an order block tested, right? But you can see price tested it, came back into this rectangle, which at this point the market was ranging, and then it broke out. There was an expansion at this point. Now the expansion that has made this other block area a failed one is the breaker block, right? So a failed, literally all you have to put with this is a failed other block is where it's a breaker block. So if an order block fails, that point becomes a breaker block. Price is likely to come back and retest that point where the other block failed. The other block that got failed, price is likely to come back and retest it. So when these things happen, or when this formation is made in the market, that's how you identify a breaker block. It just happens. This is a failed order block because price already broke through. And now it didn't just break through, there was momentum, there was a displacement candle, there's a fair value gap. All these things is enough to make it very valid that it has to have a displacement candle, and a displacement candle literally is just having a big bearish candle or bullish candle. In this case, a bullish one that has a fair value gap. That's literally a displacement candle. And you can see from this point, this was the first one right across it. There's also this one, but it's within it. So we're only going to start to identify them from this point. Price is likely to come back to this line where I marked out here, and then this is gold, right? So this explanation is very recent, and you can take advantage of it. So we have the bearish, we have the bullish. All you have to do is take this 5%. So when you have another block, you mark the area out, price breaks through it with the displacement. It has to have those fair value gaps. That's what makes it really, really valid. But you can have some other ones that are not so strong. Those ones might not be so strong. So the risk of those ones will be high compared to the ones that have displacement candles around them. So you have to understand these things and know that when your other block fails, most of you be like, oh my god, how did I not see this? Sometimes it's not even your fault, right? And like I said, not every break or failed other block points is a meaningful breaker block. There are qualities to these things, like I already mentioned, the displacement, the break of structure, which you can see at this point. There's a break of structure, there's also a displacement across it. Those two things are very solid while you spot your breaker block, right? So now you also have to recognize your rejection block. It's just generally identified around an area where price aggressively proves a level but is rejected often, leaving a prominent weak. So areas like this, you can see that when price got into, the reason why I'm including this is because it's present on our chart, so you have to understand it fully. Price got into this other block. You can see the wick, it got pushed back. So that's a rejection block. So this bearish candle is the rejection block itself. So price pushes it back. Many traders already believe, oh my god, we have a rejection block already, and then I think it's going to be a valid sell, and then everybody just jumps in and then becomes victims, right? This is what everybody originally thought, because we have been waiting for price to get to this point and then sell off, right? But the fact that you can see that there's a break of structure here and price did not break it is enough to know that it does not have a reason to go back here. What's supposed to originally happen now is when price taps into this point, it's supposed to return. So even if this was present, right, it's just going to dance around it and then break through and head for the support, not the resistance. You won't have a business being held at the resistance. You have a business being held at the support level because we're expecting it to be bearish. So these are insights that you need to have to not be victim of the losing streak, because it's quite draining to be on a losing streak. So when you see price rejecting off your resistance level in a bearish trend instead of your support level, the part where it's supposed to be resistance off is the support level. When price gets to your support level, it's supposed to be resistance at that point. It's supposed to be resisting that support level, right? And then maybe take a pullback back and go to a lower time frame, and then you can see that there are like other previous supports that was created while price was heading for that external support, right? And then you just know this is the reason it's reversing, it taps into it, and then it continues, and then it breaks through it, taps back into it again. You know, those series of breakout and retest and continuation, that's what it's supposed to be. But you saw that price came here and then it created another rejection block. So this is it again. There's another long showing rejection from that point. This candle alone was enough signal to tell you if you're in the market to step out. I know you'd have been asking, what about this point, right? You can see that one has it from the head and the bottom. This just has it at the bottom, showing you that price being pushed. Just like this one, it's just from the top. Price was pushed from the top downwards. Don't have it on both sides. So you have to know the difference between this. Look at this. So you just need to understand those are the difference. So your rejection block with your breaker block and all the resistance and support, all of those many things, you just need to have them in check. And don't forget that there has to be a break of structure and a displacement candle, a strong displacement candle. Okay, these are just two things you need to understand. And you also have to realize what we call an inversion fair value gap, IFVG, inversion fair value gap. So you already know what fair value gap is, right? And like I said, the displacement has to have a fair value gap. It cannot be fair filled. It has to have a fair value gap for it to be valid for price to return to that point, right? We already know that fair value gap are the imbalances. So every time we have imbalances, price is likely to pull back to that level. So which is why it's important that your failed order block that becomes now is a breaker block has to have a displacement candle that has a fair value gap, which is already a strong enough signal to tell you price is coming back to that level, and this is going to be solid. It might be short term depending on the overall trend, but it's going to, and then from that level you know it's going to bounce back, right? So an inversion fair value gap occurs when a fair value gap fails to hold its original role and subsequently becomes relevant to the opposite direction. So when you have a fair value gap and then price gets to that fair value gap and then it creates another fair value gap at the fair value gap. Do you understand? So instead of price to go and fill the imbalance at the present fair value gap, it gets to that imbalance and then creates another imbalance there. That's an inversion fair value gap. So when you have situations like that where price gets to a fair value gap and creates another fair value gap, you already know that, oh, it's expected that price fair value gaps would neglect price, right? So if we have another fair value gap, creating another fair value gap opposite the previous one, the most current one that we're working with or working towards, right? And then this happens, you already know that if price was going upwards, and then it created a fair value gap like this, and then price comes back and fill this level, but it creates another fair value gap while filling this level. Automatically, we already know that at this point, what is likely to happen is it could cause a switch in the actual position that we're going towards. So these are just things you need to look out for when you're um, dealing with your breakout blocks. So fair value gaps, creating fair value gaps opposite each other, when you're supposed to just test that one and then bounce off that area, and then it creates another instead of just bouncing off that area. You know that what's likely to happen is a change in the whole picture you had, or the whole setup you had, because price originally supposed to just fill that imbalance and then bounce off, right? Not fill the imbalance and create another imbalance while filling the imbalance. It means it's going to come back to that level. It's already off. So in cases like that, if once price bounces off that level, it's likely to still come back to that level. And in cases like that, it could be a switch. It could be a switch in trend most of the times. Most of the time it could just be a retest. But if it's solid, if it's not just a very tiny fair value gap, it's solid, you see a very big engulfing candle, all of those things that leaves that fair value gap there, you know it's going to change trend. So you have to put all of these things and watch out for these things while price is coming back to respect your breakout block. You check for the displacement, you check there's a break of structure, your displacement has an FVG, and an FVG is not created across the FVG that it has when it comes back to test that area, because that would automatically mean a switch. So these are just things you need to understand while you're working with the breakout block. So yeah, that will be all. Bye for now.